In this video, we will look at several examples of how to enter a position using the HTF3-LTF2 combination. If you pay attention, this combination has only one difference from HTF2-LTF1. The difference is that the inducement, which can only be a fractal minimum or maximum, is located near or inside the volume confirmation zone. Let's look at the first example on the chart to understand this a little better. Starting with the 1 week time frame, we see that the price made a liquidity raid of the previous month's high and selling volume entered the market. Thus, a rejection block formed on the chart, which we can consider as variable 1. It's also important to note that the price is within the 1 week bearish traded volume, which is an additional factor of strength for our idea. To find the second variable, we need to switch to a lower time frame. In our case, it's the 1 day time frame, where we clearly see a fractal high formed above the 0.5 level of the rejection block. However, this is absolutely not a problem, and we can consider this as our variable 2. All conditions on the HTF part are met, and we need to wait for all other variables on the LTF part. V3 volume confirmation, greater than V4 trigger, greater than V5 entry. The price comes to this fractal, makes a liquidity raid, and the volume is confirmed by 2 available methods on the 4-hour time frame. First, a rejection block forms as a primary indicator that selling volume has entered the market. Second, 2 order block zones form. Which of these elements we will consider as variable 3 depends on the trigger. We switch to the 1-hour time frame and see that a fractal high has formed near our order block zone, which can act as the V4 trigger, but only on the condition that the price simultaneously tests the order block zone and then confirms the volume on the 15-minute time frame. If the price does not react to this fractal and does not confirm the volume, we can consider a fair value gap inside the order block as the trigger, and from there, look for short positions. At the opening of the London session, the price performs a liquidity raid on the hourly fractal, tests the 4-hour order block zone, and confirms the volume by forming an order block on the 15-minute time frame, from which we can enter a position. The last thing left is to find the target for our take profit. As we already know, the target time frame is usually equal to variable 2 from our combination. Accordingly, the nearest target for our position can be the 1-day fractal low. The position can be opened, giving us a risk-to-reward ratio of 6.76 and a fairly quick completion for such a large distance. Let's examine this position from the perspective of logical elements. I will immediately show the chart along with a schematic example. V1 rejection block and V2 fractal high form a logical element from the liquidity injection group. V2 fractal high and V3 order block form a logical element from the volume confirmation group. V3 order block and V4 fractal high again form a logical element from the liquid injection group. The logic remains absolutely the same. In this case, the fractal high, which is actually the inducement, is often referred to as the trigger. The last logical element from the execution group is formed by V4 fractal high and V5 order block. This is essentially the same as volume confirmation, but the difference is that the rejection block is excluded because we don't use it for entering a position. The combination of these logical elements forms our trading strategy. I found the second example on the 4-hour time frame. It is unlikely that anyone would have used this combination in real trading at this exact point, but it is suitable for illustration purposes. On the 4-hour time frame, the price takes liquidity from the fractal low and a bullish fair value gap forms, indicating that buyers are currently dominating the market. At the same time, the price is within a 4-hour bearish fair value gap, which could also provide selling volume. However, if we recall the from zone to zone rule, we can assert that the price is likely to move from the bearish zone to the bullish fair value gap zone, from where the movement is expected to continue. We mark this as V1. To fulfill the remaining conditions of the HTF part, we need to switch to a lower time frame and find the second variable in the form of an IDM. On the hourly time frame, there is a fractal low that has formed the fair value gap zone. Therefore, we move to the LTF part. Here, as in the previous example, the price performs a liquidity raid on the fractal low, simultaneously tests the fair value gap zone, and on the 15-minute time frame confirms the volume in 2 ways. First, an order block zone forms, and second, a fair value gap zone forms. Either of these elements can be considered as variable number 3, but it all depends on the trigger. I want to make a small digression and tell you about one interesting detail. When we have a trigger in the form of a fractal point, or FVG, and the price comes and tests this trigger, then confirms the volume on the same time frame in the form of an order block, or FVG, we can enter a position. V1 trigger greater than or equal to V2 entry. The trigger on the 5-minute time frame is the fractal low. The price performs a liquidity raid and confirms the volume in the form of an FVG. Accordingly, this constitutes variables 4 and 5, and the position can be opened. But before that, we need to determine our target. As I mentioned earlier, the target most often corresponds to the time frame of variable number 2, so we switch to the 1-hour time frame and look for the nearest fractal high, or FVG zone. The nearest fractal high gives us a risk-to-reward ratio of 3.3, so the position can be opened. The third example occurred on gold, with the first variable being a bearish daily fair value gap that formed after a liquidity raid on a fractal high. Switching to the 4-hour time frame, we see a fractal high that, like in the previous example, formed an FVG zone and can act as variable number 2, or IDM. The price trades within this range for a while and forms 2 more fractal highs that will serve as additional liquidity injections into the market. On the 1-hour time frame, we observe an impulsive price delivery to these fractals, followed by volume confirmation in the form of a rejection block, which can serve as variable number 3 in this context. On the 15-minute time frame, a bearish FVG formed below the rejection block as a trigger. The price covers this gap, simultaneously testing the rejection block and confirming the volume on the same time frame in the form of an order block. At this stage, the entire combination is present, and we can open our position. Moving to the 5-minute time frame, we also see volume confirmation in the form of an order block, but the zone is slightly wider than on the 15-minute time frame, which could negatively affect the potential risk-reward. On the 4-hour time frame, the nearest target for our position is the fractal low, where we place our take profit, resulting in a risk-reward ratio of 2.46. The delivery is slow, but the position closes in profit. This combination forms quite rarely on the chart, but these were 3 basic examples to help you understand the logic and how to work with it. If this video was useful, don't forget to subscribe to the channel, like, and leave a comment.